Schiff Show.
Today's podcast is sponsored by Neolight. The makers of some of the most effective and best valued red light therapy products currently on the market to promote healthy living and longevity. Check out the exclusive discounts for my audience at neolightbed.com. Well, another Jobs Friday and another official government report on the economy, in particular the job market, that came out stronger than expected. In fact, just about every jobs report over the past year has been stronger than expected. What's significant about this beat is not just the magnitude, it was a pretty big beat, but we've gotten into a pattern where the government reports a much stronger number and everybody celebrates the good jobs number, but then they quietly revise down the previous number that they celebrated the month before. And they actually revised it down so much that it turns out that it wasn't a beat after all, it was a miss. But nobody bothers to cover that because they're celebrating the new beat. And the pattern is, well, a month later, it'll turn out that that wasn't a beat either. It was a miss, but no one will care because there'll be another beat to celebrate. Well, this time, when they revised down, or they revised the prior month, which was reported at 216,000, which was a beat, instead of revising it down, they revised it all the way up to an even bigger beat of 333,000. Now, I didn't expect that. In fact, a month ago, I expected the number to be revised down, which was what happened with the last 10 or 11 reports. Maybe the government saw that a lot of people were calling out this pattern, and so they decided to do this to kind of, stop that way of thinking, right? That's another, me thinking the numbers are manipulated. But so many people now were starting to say, hey, wait a minute, this doesn't make sense that this is happening every month. I think the government kind of thought, hey, maybe they're getting onto us, so we better slip in an upward revision, right? Because they're starting to get suspicious. So maybe that's what happened. So they revised the prior month way up to 333. And the January number, the consensus was 170. And we got 353,000 jobs. So more than double the estimate. But even if you look at the consensus range of estimates, the low number was 120,000. The high number was 200,000. So we almost doubled the high end of the range. Also, the unemployment rate fell from 3.8% to 3.7%. So more good news, right? The unemployment rate is lower. Now, the labor force participation rate did not increase. It's held steady at a very low 62.5. Private sector payrolls surged by 317,000. And the prior month was revised from 164 to 278. The consensus was 142. Even manufacturing, 23,000 manufacturing jobs versus the 5,000 that had been expected. That's one of the biggest increases in manufacturing jobs, despite the fact that manufacturing is in a recession. And all the manufacturing numbers are horrible. For some unexplained reason, during this manufacturing recession, there's all these manufacturing jobs that are being added, right? That's just another thing that doesn't really make sense. Average hourly earnings, they were up 0.6, which was double what was expected. So another strong component that, people would think, hey, the Fed won't like that because, the wage price spiral, that BS I talked about on Wednesday's podcast, but generally the markets don't like seeing big wage gains. The one sign of weakness in the official report was the length of the average work week, which dropped considerably from 34.3 to 34.1. The consensus estimate was 34.4. It was a big drop. In fact, these are the fewest hours that people have worked since the depth of the COVID lockdowns. And so even if you look at the fact that workers are earning more per hour because they're working fewer hours or fractions of an hour, their actual take-home pay went down, I think, on average during January. But that was the one negative in the official report. But I don't believe this report at all. I believe the household report, because that's the report that actually makes sense, because it confirms all the anecdotal evidence that's out there. I mean, first of all, before I even get to the household report, remember, the ADP report came out on Wednesday. I mentioned that on Wednesday's podcast. And according to ADP, which is a private company, but they're surveying the same jobs that the U.S. government is surveying. This excludes government jobs, so it's just the private sector. But they reported 107,000 private sector jobs for January and 158,000 for December. The government said that we had 317,000 private sector jobs in January and 278,000 private sector jobs. Why is the government coming out with so many more jobs than the private sector? I mean, who are you going to believe? Well, the private sector, doesn't really have an agenda, right? They're looking to report the facts as they can calculate them. The government, of course, has an agenda. The Labor Department is part of the Biden administration. So clearly, they want to report strong job numbers. So when you have a huge divergence between what an unbiased private sector company calculates and what a totally biased government reports, who are you going to believe, right? The government or a private company? And, making it worse, look at the numbers that Challenger Gray reported, another private company. Every month they report the layoffs for the month, big layoffs. And they reported 82,307. That is a huge number of layoffs in a single month. And you don't normally see months with that big a number. I think it was the biggest number of layoffs in a January going back to like 2006 or 2008, with the exception of last January, 2023, there was a big number. But it is rare that you see this many jobs. It was a huge increase, too, in the number of jobs that were eliminated during the prior month. So with all these job losses, and if you look at the unemployment numbers, too, that came out on Thursday, there was a big spike, 9,000, 224,000. But in the last 2 weeks, we've had the biggest 2-week spike in unemployment claims since early 2022. And the continuing claims now, unemployment, people that are staying on unemployment, is the most since December of 2021. So the labor market appears to be deteriorating, yet according to the government, right, it's a boom. But again, getting back to the household survey, once again, the household survey reported a net decline in jobs. According to that household survey, we had a loss of jobs on the month. I wrote down the number. Where was it? I tweeted it out, so you can go see a lot of this stuff on my Twitter. 31,000 jobs was the number that was lost. So again, which survey are you going to believe, right? You have two conflicting reports. You have this establishment survey that says we gained all these jobs, but then you have another survey, household survey, that claims that no, we lost jobs. And in fact, the household survey is even worse because there was a huge decline in full-time jobs, offset by a gain in part-time jobs. In fact, if you go back over the last year, all of the jobs that have been added have been part-time jobs. It's just that we've added more part-time jobs than we've lost full-time jobs. And that makes sense because people have the ability to work multiple part-time jobs. There's a limit to how many full-time jobs one person can handle. I mean, in general, if a job is full-time, that's pretty much taking up all your time. You can't have another job. But when you have a part-time job, it's only part-time. I mean, it could be 20 hours. You got plenty of time for another job. In fact, a perfect example of this is Meta, because Meta was one of the stocks today that came out with better than expected earnings. The big ones be Meta and Amazon. But Meta had great earnings, beat the number, and the stock rose by 20%. Now, on its own, just for a second, that 20% gain equated to about $200 billion of market cap. That is the biggest one-day increase in history for the market cap of a company. But to put that in perspective, I think there's only 55 companies in the country that have a market cap of $200 billion. And so Meta, Facebook, added the entire market cap of most companies, more than that, in one day. In fact, if you want to compare it, I did a quick look on gold stocks. You need to go for the top 15 gold companies in the world. That would be the Barricks, the Newmonts, the Franco-Nevadas, Agnico Eagle, all these big guys. The biggest 15 gold companies combined barely have $200 billion in market cap combined. In fact, I looked online, and the top 85 gold companies in the world, which is probably pretty much all of them. I mean, there are probably some tiny ones, but when you get the top 85, that's pretty much the industry. The entire industry has a market cap of $280 billion, and Facebook added that market cap, or 70% of that market cap, just today alone, to the market cap it already has. But that also shows you how cheap, how undervalued gold mining companies are when the whole industry is barely worth today's gain in the market cap of Meta. But getting back to the real reason I'm bringing it up, the reason that Meta was able to grow its earnings so much was because of massive layoffs over the past year. Meta let go of about 22% of its workforce. That's 19,000 jobs that Meta eliminated over the last year. So it doesn't have to pay those salaries anymore. So that's helping their margins. And also, they laid off a lot of workers, and those workers used to work in offices, and so they no longer have that office space. So they cut back on their rent, they cut back on their workers, and it's still the same service, right? If you use Facebook or you use Instagram, I mean, you don't know that there's fewer people working there. And so it's ironic because we're celebrating the earnings beat in Meta. We're celebrating the strong jobs numbers, but we don't get the irony that the beat in Meta's earnings is a result of massive layoffs over the past year. Now, where are all these layoffs? Why are they not in the government numbers? Well, one reason is because a lot of those laid off Meta workers probably got part-time jobs to replace the full-time job they lost. So if you were employed at Meta and maybe you were making $100,000 or more working at Meta, and you lost that job and all the benefits that went along with it, and so you picked up 2 part-time jobs during the week. Let's say you work at McDonald's in the morning and then you work at Walmart in the afternoon, and then on the weekends you tend bar somewhere. That's 3 part-time jobs. That's +2, right? So that's going to show up as a net positive in the official non-farm payroll. That's going to show, hey, 2 jobs were created.